Monetary policy in 2023 ended on a positive note. The central banks are not as worried about inflation as they used to be. Growth is on track for India, and in the US, labor markets are looking tight. So, there are plenty of reasons for both fixed income and equity investors to cheer about. Which brings us to the question, is it the right time to look at gilt or government securities for a fixed income investor? Join us on Saturday, 13th January to discuss this.
Started talking about time correction, but just see the direction of our conversation. Now we are talking about price correction. The market could also follow this. Our subconscious is actually expecting the price correction. That is the honest truth, because otherwise when you talk about one thing, you know what will happen next in your mind. You may try to avoid saying it, but even when we do that, in our mind it starts working on our mind. See, we started talking about time correction. Let's say you are in a stock which stays at the same price as it has stayed for these 2 years. It went up after COVID, 21 it hit the peak, 22 beginning it was at the peak, then almost entire 22 and 23 these stocks have all stayed at the same, because see what has happened, the earnings grew but the valuation stayed at the same place, or there is a slight dip in the valuation, or the earnings went down, valuation also went down. So broadly it's only time correcting. The valuation has not contracted. P/E ratio of these companies have not fallen. Market cap may have fallen, but the valuation has not fallen. There is a difference between the two. But now you have a chance, as you are articulating very clearly, to see valuation contract, which means the P/E ratio will come down and market cap will also contract, right? This is something investors who have come post 2017 have not seen for a long duration of time. Even 18 to 20, there was a contraction, gradual contraction in small cap, but the bounce happened in the next 18 months. So it's only a 4-year cycle if you take 18 to 22 in small cap. Now this 4 years has given people the confidence that small caps can be only two things, either they are multi-baggers or they are compounders. They won't lose value. It is that feeling which is giving you this time correction. Otherwise you should have had a price correction, because when valuation goes to an exuberant zone, when it becomes frothy, it's a matter of time before the froth runs down. That is our experience. But it's taking more time now simply because of the recency bias of a lot of people. The time correction itself is created by the recency bias of so many people who are new to the market, and the institutional guys who feel it's a good time to gather assets. So nobody is telling them there will be a price correction. They're taking the money from these people, deploying it in such a way that it gives you the impression of a time correction, but it's actually a price correction waiting to happen. When it happens, what do you think these new age investors will bring out as a response? How do you think they will respond? First you tell me how they will respond, and then we will go to how ideally they should respond.
So if you see the data coming from the big houses which are dealing with the young entrepreneurs, which may, or the young investors, stroke traders, the chances are they will panic. Will they be able to sit for 2 years, 3 years without worrying about it? It's extremely doubtful. They all know that they have to do this in theory, but practically will they be able to do it? Will they be able to stand the peer pressure? Tomorrow you will definitely see a headline saying Mukesh Ambani has lost so many crores in valuation because the share price has come down, right? With all this being bombarded, how are you going to react? You are going to sell. Maybe you are selling at a wrong point, but the chances are you will sell. Should they be doing this? No, they should not be doing this. They should actually be buying. Will they have the guts to buy? I don't know. But one thing which the industry is sure, or the mutual fund industry is sure, is the SIP amount won't fall. And if the SIP amount doesn't fall, then they would keep buying at better valuations, which is a lower price.
So the mutual fund industry or the institutional imperative today is that they would be able to buy if there is a price correction.
They should be.
So they are not unduly worried about the time correction. That's probably where the confidence comes from. But what about the retail investor who is bought on his own? Because you have nearly 10 crore people who have done the same thing on their own. Are they even prepared for a time correction?
They're definitely not prepared for a time correction, and after say even 6 months the price has not moved, they'll just sell out of boredom, because I think there is gamification in the market. People want to do something and they find that nothing is happening. Chances are, oh, I bought MRF, nothing is happening, so I'll sell MRF and buy something more interesting, something which fluctuates more. So that is perhaps one way how they will respond. Not a very great thing to do, but maybe that's how they will respond.
But what will they do when they see a price correction? That is a question. Suppose between now and the next 6 months. Like we saw one in the last 2 days, right? We saw a price correction in the last few days.
Yeah, but what happens is, for all these people, especially those who are trading on the margin, there is an automatic stop loss.
So they will sell.
It will be sold. They will not even be asked. Correct. Because they've used that money as a margin for some other transaction or for an F&O position, so that will get sold, and they won't be asked whether you want to sell it or whether you can make other arrangements, right? So those shares will get sold. So anybody who is on a leverage position, chances are he or she will have to sell at a loss, and so therefore that might trigger more people saying, oh my god, he is selling, she is selling, etc., etc., so they might sell more. So all these things can happen. Very difficult to say how an individual should react, because it depends on how everybody around them is reacting.
So the herd mentality will decide how they manage a price correction, if they last till that.
Yes.
Because it looks like we are postponing the price correction.
Yeah, or
By actively supporting a time correction.
Or if their margin calls are there, they would sell off even earlier.
So that is somebody else forcing you to sell.
Absolutely, absolutely.
Effectively, decision making in a time correction is now a slave of volatility.
Yes.
How can an investor avoid that? What can he do to come out of that and safeguard himself? Some advice for these investors.
If he's a trader, the broker himself puts the lower limit or something like a stop loss and say, okay, you bought at 70, 63 would be the stop loss, or maybe even 65 would be the stop loss. If you are an investor, you have to take delivery. So after you take delivery, it is completely up to you. At least it is your decision. You cannot say, oh, my stop loss got triggered. You don't have to put a stop loss. So then you see the price at 70, you see the price falling at 50, then you turn to your research and say, is my conviction good at 50, or is it actually better? Right? When prices fall, your risk is actually going down, your risk is not going up. So at these prices, will new investors come, will they buy? If the answer is yes, then hold on, you will get your price. But if you have bought at an extremely high PE and now it has fallen to a reasonably high PE, you should still sell off, because when panic hits, they will really take the PE of whichever height it is and bring it down to the ground.
Subra, what you are saying makes me think that the new age investor who is technical driven will probably be better off. At least he will sell on panic. Before others panic, he would sell. Whereas the guy who is just a mechanical averager, he will get stuck. So the guy who is actually looking at a chart and taking a decision, because the trade is not going the way he wanted it, will probably be better off now.
I don't know, because see, what happens is you are talking of an informed investor, informed trader. I think even in trading, you have to make a distinction between a guy who understands, reads and all that, and another guy who just thinks he's a technical trader. He depends on someone, and if he is stuck to that price, he will not sell. He will wait, and he will also get ruined.
How can an investor improve his behavior in a time correction? Some suggestions to improve your behavior, something somebody can do during a time correction.
Time correction is not much of a problem if in a portfolio. So if you have invested in a portfolio, chances of there being a time correction is less. But if you have invested in an individual script, let us take Coal India at 119. Just like ITC, it also went through a bad phase. But if it is giving you a 10% dividend yield, then look at the dividend yield you are getting. Why would you sell Coal India at 210? Even at 210, it was not worth selling, because you were getting a good dividend yield. So if you are a value investor who is hoping that 50% of my return will come from the dividends and 50% from the appreciation, remember, you are only missing out the appreciation. The dividends are still coming.
Correct.
So you wanted a 12% return, 6% is the dividend yield, 6% is the appreciation you're looking for. So that may not come like clockwork precision. It's not like PPF that you will get 7.15 every quarter, or 7.15 per annum, but you will get it every year. But here these things will happen. There will be a fluctuation, but be happy that at least half the return is coming to you in terms of dividend, and the other half will come to you eventually, because the company has the EPS. They are showing it by paying out a dividend. So stay put. It's difficult, but it is worthwhile. There will be enough people who tell you that I had bought this share, I forgot about it completely, and then I searched and found, and voila, I got a 10 bagger, 20 bagger, 100 bagger, whatever, right? So that patience to sit through will be tested, and people will get rewarded.
So the guy who can sit through a time correction will eventually be rewarded with choices are correct. So how should you validate your choices in such situation?
If you are a value investor, you don't have too many shares to buy. So after you have identified the company, don't do it first. After you have identified the company, see whether there is institutional holding. And in the institutional holding, if all the value investors or the value portfolios are holding it, it means your process is right. Your price may be wrong, but your process is right. So if your process is right and you have bought it and your share is going for a time correction, there is nothing you can do except maybe add to your portfolio or sit tight during this period.
What is happened in the case of NTPC power grid type of shares, which are public sector undertakings? It also happened in some other companies which had the potential to have higher valuation. The railway stocks, for example, but many of these are government companies, but they were value stocks, and then eventually when the time correction ended, the price went up instead of going down. Whereas market was thinking the price will go down. However, the opposite is what I think market should fear now, because a lot of shares are trading at valuations higher than their normal band in which they have to trade. When they are above the band, the chances are they will come back into the band, and once they come into the band, more selling pressure may come about, which is what will create a very significant price correction. And when that happens, an investor must know whether he has to buy more or he has to sell or not buy, just hold on to whatever he has got. So the time correction that we are seeing or about to see extend into the future is probably a time where an investor must act decisively where he needs to act, must avoid action where there is not a dire need for action, and must also show patience where it needs to be shown. So it's a phase where a lot of decision making is involved, and I hope that investors show the right level of discretion that their investment portfolio demands and achieve what they can get out of waiting, rather than fail even after waiting. If you are waiting long, I feel that success is due to you, you owe it to yourself. And I hope that this time correction teaches more investors the art of getting what is due to them. Thank you for this conversation, Subra. It was very interesting.